Okay, so it is Monday of the third week of March, right? It is the third week of March, and this Monday I took two trades and met my profit goals for today on TopStep, and then on my brokerage, I still have a trade floating around, $300 to $500. I'm gonna show you my first trade. Um, Again, this is just for my documentation, but in the future, I'll be teaching this to you guys. So we're up here on the 5 minute, and we had this 8:50 to 9:10 macro. I got home and I saw that I got home around like 8 p.m. and I saw that we had this um, 5 minute fair value gap. That price was being affected by, as we see this large displacement into the fair value gap, followed by smaller volume candles. And I've been seeing this recently where price does press out of this fair value gap, right? But then again, it created high, a higher high within its current leg that it could not break out of, as we see with this um, creation of high resistance, right? This is high resistance. This is high resistance, um, signaling, probability for a downtrend. Anyways, within this 850 to 910 macro from ICT Concepts, uh, it's a range of time where you might see um, price displace into liquidity zones, right? So disregard this 5 minute fair value gap. As we were trading into 850 to 910, at the second half of this macro, I saw, okay, this was the high this was the high resistance liquidity, right? So the recent low here was immediately taken after it was being created. And we have bearish price displacement right here back into low volume. But this low volume candle leaving another fair value gap. This gap between three candles and their respective wicks, not reaching into each other, rather leaving a gap within the middle between these two wicks. Observing that this first fair value gap was developed, at the end of this third candle, we have a development of a bullish fair value gap. Just like we saw on the 5 minute time frame. Let's clear this up. We have high time frame. We have high resistance liquidity developing at a point of interest on the lower time frame. So we're on the 1 minute, and if we go even lower to 15 seconds, we can see high volume candle followed by low volume candles. And I could guess right now and see that there would be a divergence in relative strength right here. And that is what we're seeing precisely. This first high is this high volume candle, followed by price wicking into the same high that has been created, but the strength on the relative strength index indicating that it is not returning either to a higher high or even at the same level, as you can see. So the RSI is a lagging indicator, so that wasn't my signal to sell. After this first fair value gap was inverse, we can say, we want to see strong continuation up to confirm, bullish price action. But we saw the opposite. Going back to the 1 minute, as that 1 minute fair value gap was playing out to be a failure, this bullish fair value gap was the next point of interest. Focusing on this bullish fair value gap, setting my trade marking aside, we can see this 3-candle play. First candle, high resistance liquidity, not closing below, a low volume candle. If we just move this right to the side, a low volume candle crossing through the point of invalidation but not closing below. That was not a signal. That is a signal of indecision, not closing below or above the body of the wick. And the third candle closing well below this bullish fair value gap. That is invalidation right there. So I had two confluences, right? A rejection of price to the upside and an invalidation of a fair value gap to the downside. Here I open my sell 2 micros of NASDAQ. Again, this invalidation of the fair value gap would signal, okay, this is a protected high. But again, with these high volume markets, and they're quite random to be fair, I set mine on this fair value gap that was invalidated but rejected price to the upside. And that was this lower high, not this higher high, because that would affect my risk to reward. And we saw this consolidation. We saw this consolidation right here. And I aimed for just around 3R, and it matched my risk to reward ratio. I did want to close before the 9:30 open, and unfortunately, price was not quite clear with the continuation of price down. And so I did close this trade slightly early, but here I am showing a 3R return if I did not close my trade early around right here. And I will show you a screenshot of my trade right here. This is my trade. This is a trade I'm showing you right here. I did close it early. It's a 12-minute trade. And the trade above, big difference, 1-minute trade exactly. And that is what we're going to move on to. Okay, now that I have explained my first trade, my second trade is like an advanced, my second trade is an advanced technical analysis. This second trade involves advanced technical analysis knowledge. That being said, I'm going to explain it in layman's terms to show you and to further help me understand my own, my own progress with trading this. Judas swing. So we are trading the 9:30 a.m. New York time Judas swing. Firstly, I marked out and I took an observation of current price and the history of low resistance to high resistance price action. I then took note of the 8:30 open. Here we see the 8:30 line and the candle open to that. Since this is a bearish candle, the opening price is at the top of the body. At this 9:30 a.m. opening price, we saw it dip below the 8:30 open price. The Judas swing liquidates above or below the 830 open. And if it does liquidate price below it, it may swing to the upside. After that initial swing at the 930, liquidating this low time frame consolidation area, I observed that the volume at this volume of what is this? I'm not receiving. The volume was not there. It was not reaching previous volume values, and I noticed, okay, that's low volume basically. Nowhere in the following candles I was trying to trade. Okay, even though we could say, all right, here, equilibrium of the wick, could have traded that. Here we are on the 1 minute showing consolidation. I have barely any price action to follow. So I just avoided that. And I deleted my bracket. Where is that? Come on. What happened to my bracket right here? Did I delete both brackets? Fuck me. Alright. See, I want to show you this bracket because let's reset the price. After this initial consolidation following the Judas swing at 930 below the 830 open, we see price break up out of this channel. Okay, so we have multiple breaks of structure and change in states of delivery, but that is not a clear indication because there are no fair value gaps here. If there was a fair value gap within this initial bullish leg, I would have, but no. This is just a confluence to a setup that is being created. And in turn, I'm waiting for the setup to finish being created for me to enter instead of gambling. After this higher low was created, we see a higher high. See, initially, this break of structure was labeled as a higher high. Following this higher low, we see price push back above this candle, in turn, a break of structure. Now, this break of structure has two opportunities for me to buy into. If price respects the equilibrium of the candle that broke structure, which is this black candle, and as we can see, I did not enter on this candle because of this candle with a long wick showing, sellers liquidating price, followed by this high volume candle of sellers filling their own orders. And so this did not flip my bias because of this higher low structure not being broken. Instead, I was waiting for a signal, the second opportunity of this equilibrium inside this wick. And inside this wick, we can see that price again, if we go to a lower time frame, created high resistance, bullish liquidity. I don't know what's happening here. This right here is high resistance bullish liquidity. Why? A push into past these lows on the lower time frame. Is it able to sustain that? No, it is not. Price follows and inverses this candle, creating its own fair value gap. But in turn, there's probably like 5 confluences I can show you on this, but that's the reason I don't trade on this 15-second at this current time, because I'm just trying to, it's Monday and I'm just trying to get back and feel how the market conditions are, familiarize myself and be a little bit more strict because of the position size I'm taking in the future. I want to make sure my foundation with these lower lot sizes can apply, and I'll be okay taking higher risk. Anyways, after this equilibrium, it was a done deal. I knew that my structure, my setup has been completed, and after a setup is completed, that's when I enter. Right. Let me just tell you the steps. First, we see a sweep of liquidity, and at our current time, the sweep of liquidity guys, I've just finished a 10-hour clinical at East Avenue in Manila, and people say that's like the most toxic hospital. I don't know what to say about that, but it is tiring. So the sweep of liquidity was at the 9:30 open, and that helps when it's at a major time frame, I mean, major landmark, time landmark. The 9:30 is the New York Open. I mean, officially it's around 8. I mean 9, but the volume comes at 9:30, as you can see right here. New York Open, sweep of liquidity. 2, we see a large continuation in price. Not only that, but this large continuation of price, it helps if it leaves fair value gaps and a break of structure. This helps with the clarity of how we're gonna take our trade and in what direction. In this, we have a continuation leg to the upside after sweeping low, selling after sweeping buyer side liquidity, lots of order stops here, stop losses being swept inside this candle, and then orders being filled. 3, a higher low. Obviously, no, a higher high, and then a higher low created. This is what you want to see. You don't want to, if a higher high was created plus a lower low, it would simply be, okay, this higher high, and then the lower low would, let's say, go below this. There's no clear direction in price at that point, so you don't want to see that. This is what you want to see. Higher high, what is that? A higher high plus a higher low. Because this is a new piece of structure. And in that piece of structure, you want to see step 4, a break of structure. So this break of structure to the upside signals that, okay, we can mark out equilibriums. Equilibrium 1, in this case, was the candle that broke structure. And equilibrium 2, the large rejection wick. Okay. In some cases, you would only have one equilibrium. In this case, we are blessed with two equilibriums, giving us two more confluences. Step 1 through 4 align with each other and in turn provide clarity. And this clarity helps us make a decision, right? And this decision is made once. For me, I can make a decision after a sweep of liquidity, continuation in price, a clear large and clear pause. Okay. And lastly, a these last two, a break of structure continuing in the direction of these, right? In the direction of this large clear continuation in price. After all of these have been met, then I execute, right? Today, unfortunately, I can't reap more of what I have sown, you know, on my combine. I'm blessed to have a brokerage where I can take full size orders, where I can open full size orders of NASDAQ. And we can see I'm up close to 2,000 right here. Again, this is not a day with high volume. I don't know why I don't have the volume. I don't have the volume rating showing up here. I might have to reset my chart later. But those are my two trades today. And I really did not want to just overtrade. You know, that is my biggest flaw as a trader. You might have all this knowledge, and you may be able to apply knowledge. You may be able to apply this knowledge when you trade, but it's the action you take after you have applied that knowledge, and this is what people call greed. You know, you take trades, you win trades. After you win a trade, what do? You know, if you say, I'm going to take another trade, why? Most often, people trade trades after winning, but they don't have a clear goal in mind. So the result of that is, when will I stop winning? Either you're going to stop winning once you lose all your profit, you know? And that sounds really bad, but a lot of traders, even myself in the past, you know, in the recent past, this was me a couple days last month. After you lose all my profit, you go even deeper and you lose the account. Okay. So where did this continuation of bad habits start? After winning, you have no clear goal. You know, it starts this habit dies hard, but you can break this habit before, if you have a clear goal before you take any trade, before you think about any setups. You know, it is the foundation. My foundation is my risk in the amount of trades and amount I win or lose. Technical analysis. This is my edge. You know, all this labeling, all this jargon, I have curated over time. And over time, you have a lot of knowledge piled up. And that's why you should utilize tools like this, FX Replay. Okay, so FX replay is basically what it says. You can replay anytime, you can replay the price action and the price history of any chart and any ticker, any stock. Here you can see me taking a play of this fair value gap inverse. You know, again, this is the equilibrium of that broken PD array, premium or discount array, which is the fair value gap, and this equilibrium tapped into, and I think that was a buy. Yeah, that was a buy, and took a profit of 1,500 at this consolidation high. Right. Anyways, this video might be getting too long, but that was my 2 trades, plus a little bit of technical analysis teachings, plus a little bit of psychology teaching. You know, you know, and that's it for tonight. That's it for Monday, and I'll see you again Tuesday. Thanks. Oh, before that, we're up 3,000 on my brokerage, and we're aiming for, you know, this price right here was already taken, and our long-term range could be right here if price breaks through this minor high, lower high, and continues up to this consolidation area. This consolidation area was wicked into 1, 2 right here. This is valid. This is invalidated. Oh, I didn't see that. These two are also invalidated by this wick. I might have to take a look. Let's see. Okay, let's take a look at to where my take profit is. Oh my gosh, that is way too far. Okay. Okay. Before I stop this recording, I want to be done with. I might have to. I might have to take it at this right here. And that would be a profit of what? 6K, just over 6,000. Okay. Just above $6,000. Let's set my stop loss now to 1K. It's 590. See what it's doing on the 5-minute. A little bit of a pullback. See, we have a break of structure. Fair value gap. It's 1027. Is it going to play out above this or below? Let's look on the 1-minute. So there's a break of structure. Fair value gap, fair value gap. No, that's just a pullback. That should be just a pullback. I'm going to move it below this highlighted area. And that's it for tonight. Thank you.